Good morning. I'm Phil Middleton, Chairman of the ONFIF Digital Monetary Institute, and I am delighted to welcome today Arnault Weber, who is Head of Marketing, and Shiri, who is the Technical Product Lead for CBDC at SICPA. And they have very kindly agreed to talk to us today about the case for digital cash. Over to you. Thank you.
Thank you, Philip, for your kind introduction. It's a pleasure to be here. We are super excited to talk about digital cash. I'm Arnault Weber, Head of Marketing for SICPA's Marketing and Digital Security Solutions. And I'm here with Shiri today, our Technical Product Lead for CBDC.
Good morning. Very pleased to be here today.
So let me start by explaining why SICPA is exploring CBDC. As you may know, and as you introduced the company, Philip, SICPA is a long trusted partner and supplier to governments, to central banks, to high security printers and the industry. We are active in researching and developing solutions that answer to emerging trends and market pressures that are prompted by digitalization. So this includes, of course, retail CBDC. Our historical role in physical cash, our experience combining physical and digital security, supporting governments in maximizing revenue generation, and our understanding of the needs of both the users and the sovereign, all of these, they give us a distinctive perspective on CBDC. But then why are we focusing on digital cash? Well, while different types of CBDC choices are currently being explored or even piloted, we are focused on exploring a design that will uniquely satisfy both the needs of sovereigns and the public within a very diverse payments landscape. So digital cash is a design that is the closest complement to physical cash and that enables a widespread adoption. Today in this short presentation, we will outline the foundation of our journey and share with you some insights from our explorations into CBDC and digital cash so far. So Shiri, the floor is yours now.
Thank you, Arnaud. So starting with the foundations that form the base for our approach and our design for digital cash. Firstly, our vast expertise on physical cash. So our extensive knowledge with decades of history, SICPA has been a long trusted partner and advisor to central banks. And we think we're well placed to understand the needs of central banks as guarantors of monetary sovereignty. So our vast expertise is not only on the manufacture, but it's also on the ecosystems, on the risks, on the players of their ecosystems and their incentives within the physical cash. And then the second part is our heavy involvement and expertise in decentralized identity community. We have members from our team that invented emerging standards, open identity protocols and technologies. We're active in government tenders and industry tenders and self-sovereign identity open source initiatives, which we are either chairing or very active in. And in addition, we have real-world experience in design and operation at scale of this technology. And why is it important? Well, because we know that identity is intertwined with payments. This know-how actually gives us a unique perspective on certain dimensions of CBDC, namely privacy, compliance, programmability of the money, and the need for interoperable standards. And we use this technology as building blocks for our CBDC technology as well. And then the third is, in addition to the top-down approach that we have, taking into consideration the sovereign needs, we also wanted to see from the user perspective, we also wanted to take a bottom-up approach to understand if CBDC solves real problems and if a CBDC would be implemented, what would it need to be actually adopted? What would be the motivation of the users, and how can we reach high adoption? So because of that, we have commissioned research, user research in Brazil, in urban and rural Brazil, which my colleague Arnault is going to talk about in this presentation, and highlight some insights from that research as well. So those three foundations have allowed us to develop our unique design for digital cash and also obtain key insights. And today we'd like to focus on 5 key insights to share with you. So insight number 1, the role of digital cash within the broader CBDC ecosystem. When we talk about digital cash, what do we mean? How is digital cash different from other forms of CBDC? Well, we know that CBDC is a digital payment instrument denominated in the national unit of account that is a direct liability of the central bank. And that includes both retail CBDC and wholesale CBDC. And digital cash is a concept we use to describe cash-like form of CBDC that can be exchanged peer-to-peer and has many cash-like attributes and properties. So we think that these attributes are important. Physical cash actually benefits from hundreds of years of design, refinement, and its attributes are carefully balanced. And that's why we aim for digital cash to have many cash-like attributes. So when we look at the attributes, there are shared attributes between digital and physical cash, such as it is simple, easy to use, a legal tender, liability of the central bank, with direct one-to-one exchange, a public good, usable by all with instant settlement. And then there are added features on top of physical cash, added features with digital cash, such as near zero marginal distribution cost, the programmability of the money, and the possibility to use it with any device. And in addition, we wanted to highlight that digital cash is a public good that should be accessible to the population. And by accessible, we mean that it should be also available offline, anywhere, with instant settlement. There should not be a need to have a bank account in order to use digital cash. So it should be accessed to the unbanked and also accessible to the underbanked, like children, and with low cost. And secondly, it should enable secure and private transactions, meaning to have accessibility to the informal economy as well, and to enable trust in society. Insight number 2 is about a cash-like ecosystem and why it should reduce risk to sovereigns and stakeholders. So a very key attribute in digital cash is the life cycle construct. We concluded that CBDC actually needs a life cycle, like physical cash. And there are different roles in this life cycle. There is the issuer, the sovereign. There are the providers, who are the commercial banks or financial services provider. And then there are the holders of digital cash, the individuals or the merchants. And we think that maintaining these roles and responsibilities also in the life cycle of digital cash will reduce operational risk, because first it will leverage the existing systems, the existing knowledge, the existing stakeholders, and it will allow many more other parties to participate in this value chain. So the sovereigns will control the supply of the money, will set the rules of exchange, and then they will issue the digital cash to the providers. So the CBDC will be issued, then it will circulate, and then it will be retired by the sovereigns as well. And then the providers would act as a bridge to the wider financial ecosystem. And then the holders, they withdraw and exchange between themselves. And there would be 2 ways for holders to get hold of digital cash. Either they withdraw it from the providers or they receive it from another holder and then they can start interacting with the digital cash. And we think this reduces the operational risk because this is not a system that there is a switch on and switch off. And when the system is switched off, then there is no possibility to make any transactions anymore. It's not a system like that. So it means that sovereigns can roll out updates, they could monitor, they could tune, and then react to risks as well. And so in our architecture, we find the same separation of concerns as in the life cycle. So there are 3 layers in our architecture: the governance layer for the issuer, where they would define the monetary and fiscal policy, the rules for compliance, and they will decide on generating and issuing or retiring the digital cash. Then there will be the service layer with the providers that bridges from digital cash to physical cash or to other forms of payment, and provides value-added services as well. And then there will be the transaction layer, where transactions take place, peer-to-peer exchange. Transaction would take place either online or offline with cryptographic assurance. And what is important about this transaction layer is that one doesn't need to go outside the layer in order to get finality. So there is no need to go to a blockchain somewhere and to get consensus before the transaction can actually be settled. So everything can happen also offline in this architecture. So I'd like to transfer to Arnault to talk to you about the user research that we commissioned in Brazil.
Thank you, Shiri. So a few words and a few insights on the Brazil user research that we conducted. So as explained, we are exploring digital cash not only based on the needs of the sovereign or of central banks, but we are also looking at the needs of the end users. So we chose to focus on the key considerations when adopting new forms of payments. We conducted a field research in Brazil. We chose Brazil because it's an advanced and emerging economy that has a very large informal sector. And moreover, and you're all familiar with this, it has recently seen a drastic evolution of digital payment methods. You all know the PIX method that was PIX retail electronic payment method that was introduced by the central bank in 2022. And this research generated a few insights that can inform digital cash design decisions to address public needs. In Brazil, people are already well served in terms of payment choice. You can see a very good illustration of this on this slide. So how could digital cash better serve their needs? Well, to maximize adoption, we think digital cash should simplify payments rather than add to existing burdens. For example, you should reduce transaction costs or save time. The onboarding should be as the easiest possible. And of course, the user experience as well should be well thought. It should as well offer unique benefits and probably serve distinct use cases when you compare them with the other available financial tools. Well, simply put, it has to be as easy to use as physical cash, but as well as easy to use as debit cards, as credit cards, or as PIX. Our research shows that the key drivers in choice of means of payments are the following. The first, convenience and simplicity. It has to be easy to use and to access. Second, confidence in immediate and correct settlement. You want to be sure that the transaction goes to the right person and is executed swiftly. Third, contextual risks at the moment of the transaction. Meaning that depending on when you are or depending on the amount of the transaction, you may choose one or another payment method. And the last point, the counterparty trust. Ultimately, you want to be able to fully trust the provider. And our research shows that the existing payments, they do not necessarily meet all of these needs. Thus, there is a big opportunity for digital cash. So a central bank considering the introduction of digital cash should take into account people's complaints and the workarounds within the existing financial landscape. This will help ensure that the digital cash will provide tangible benefits, overcome pain points, and support trust. The full research will be made available soon. Back to you, Shiri.
Thanks, Arnault. So Insight 4 is about a recommended technology used for the payment transactions. So this is not blockchain. This is not a centralized database. This is a bare instrument where digital cash are files, they're tokens that are held directly by the bearer. So it's a token-based and decentralized design choice, and no ledger is actually needed to record transactions. Instead, the consensus would be obtained at the edge, meaning near the source of the value transaction. So digital cash, like banknotes, is going to be held directly by the bearer and will be able to be used by anyone. And this means it's a very resilient solution in times of emergency. There is no blockchain needed to validate transactions. And then in order to change the ownership of the digital cash, of the tokens, this would require a cryptographically secured value transfer protocol that includes protections against double spend and that verifies the transactions before the settlement. So this digital cash design is also endorsed by the eCash Act, by the US eCash Act. So they say that the electronic dollar, as defined in the bill, would be a bearer instrument that people could hold on their phone or a card. And the fifth and final insight for today is about our recommendation to use open standards as a design foundation. So our standards and protocol-based architecture leads to non-proprietary and loosely coupled ecosystem. And the benefits of that are huge. First of all, interoperability, the ability to use wallet applications from different vendors or different versions with no vendor lock-in. The fact that the communication is secure between any combination of devices between the payer and the payee. The fact that it allows seamless integration with decentralized identity standards, which is very key to payments. The fact that an easy and flexible integration with legacy, current, and emerging financial system infrastructures and standards. And the fact that your architecture is protocol-based actually enhances freedom of choice and market innovation at the application level. And now back to Arnault for the closing.
Thank you, Shiri. So let's wrap up this quick presentation of today. We all know that the world has shifted from asking whether digital currencies will succeed or not to how and when they will effectively become mainstream. And the pandemic has even speeded up the urgency for CBDC. But we think that it is users themselves who will determine their own choice of payments instrument. This, again, it's very contextual. It's based on specific user needs at the moment of the payment. In the absence of other incentives for digital cash uptake, it is its design that matters the most. It must offer more than current available options in terms of costs and benefits, of course, like, for example, affordability, convenience, or availability. So as a summary, we outline the case for digital cash as follows. Digital cash is the closest to cash solution for sovereign money that builds on existing roles and responsibilities in the cash lifecycle. It offers a low friction, accessible, private, and inclusive experience for the public. Ultimately, CBDC solutions will thrive or fail on the level of public uptake. So digital cash, we believe, the digital cash design provides the strongest foundations for a successful CBDC adoption. Thank you very much for your attention. It's been a pleasure to be here today. We'd be happy to answer questions.
Thanks a lot for the opportunity to share our ideas. We really hope that this was valuable insight. And yeah, feel free to reach out and join the discussion